Okay, let's get started. Welcome to the show. Ed Ponsi here on behalf of FX Street once again. Great to be back. Interesting developments overnight. So we'll get right into it, but before we do, just a quick reminder that this is your room. So feel free to ask any questions, or if you have a particular currency pair you'd like to review, let me know and we'll take a look at it on the live charts. So we like to do live analysis here, both technical and fundamental, and try to answer all of your questions at the same time. So pretty wild activity overnight here. Really kind of interesting. Euro is off. You can see a big red candle on the euro. British pound, just a second. British pound also red against the dollar. So dollar is a little bit stronger, but the yen is stronger still. And the yen is creeping very close to its lows now. It's been coming down for 3 days. Well, dollar yen's been coming down for 3 days. We could say the yen is getting stronger, actually, on this chart. But we're getting really close to these lows in this area. We're getting really close to an area where I would consider inching into a position on a long position for in view of a potential intervention. We're getting there, folks. We're getting there. But it's not happening very quickly. And Japanese authorities react to strong moves, sudden moves in the yen. They don't want the yen to become stronger suddenly because their companies might not be hedged for a sudden move or a big move. They'll certainly will be hedged for a small move. And so small moves, I don't think they're worried about that. They're worried about the big move. But a lot of this is being driven by activity in Asia overnight. See, the dollar is strong, the yen is strong. What does that tell you? Risk off, right? The risk currencies are gaining strength, right? The ones that we run to, the ones that investors run to when they're afraid are the dollar and to another extent the yen, but definitely the dollar. And those two currencies are definitely strong. Look at the movement here. Big drop overnight in the S&P futures as Asian stocks sold off overnight. And this one pretty much undoes yesterday's gains. Now, we've been creeping steadily higher here. So, and we have not been without red candles. It'll be interesting to see if they will buy the dip when the U.S. market opens a little over an hour from now. Question from Pan, should we short gold and silver? Well, let's take a look at the chart. Right? Let's see what we see here. At GC for gold. And what a move. What a move here as it jumps up. This has been a fascinating chart. This was an inverted head and shoulders here. I don't know if you can see it. It's kind of strange looking. But you've got left, head, right, but it never breaks out. And that's something that's really important to understand is if it doesn't break out, there's no trade. So it still hasn't broken out, and we had a lower low, which would seem to negate this pattern. All right, so I'm not that concerned about this old inverted head and shoulders anymore. It just never took. And now we have a lower low. The question is whether or not I should short. The question in my mind is, you see, I don't know yet if this is a lower high. It could be. But I don't know yet if it's going to be. This could still go higher, right? And it could become a higher high. So I would probably hold off on shorting this. I think that would be a little bit risky at this point. As far as and so that's as far as gold is concerned. If U.S. strengthens, would correlate. Yeah, if the dollar strengthens, that puts pressure on gold and oil. Yes, that much is definitely true. Oil, though, seems to be, man, somewhat unstoppable here. Look at that. But, red candle today. Again, everything that's been going up has gone down so far today. But it's still early in the U.S. The U.S. buyers could use this dip to buy oil, buy stocks. So I'm going to withhold judgment here. I mean, this is clearly an uptrend, right? So I'm not really thinking about shorting this. My philosophy is that if it's in an uptrend like this, that's a very strong trend. And my philosophy is buy the dips on a trend that's strong. One of the things I might use is a tactic that I have also used in Forex, and that's looking at 10 and 20-day exponential moving averages. Right, the 10, not so much, but maybe the 20. Take a look at the 20 here. Yeah, no, it's not really respecting the 20. A little bit, maybe. The 20 could be money. Okay, we see some support here, here, and here on the 20. So maybe the 20-day moving average is the place to buy oil. That's the 20-day exponential, and right now it's located at 48.81 right now. So I wouldn't be thinking of shorting it. I mean, it could work, but it's a gutsy move. You're definitely going against the trend if you short it. Is it overbought? Very possibly. Let's check out the RSI. First of all, on the look at that. On the daily, yeah, overbought for the first time since going way back here. It's been over a year. There you go. The last time it was overbought, oil was at $115 a barrel up here. Last time it was overbought. Now it's overbought. But that's the first time. It's a really good point. That's the first time oil has been overbought in 2 years. Right? 2 years ago. That's June 13th of last year. So almost 2 years ago. Today's June 9th. So it's been almost 2 years since oil has been overbought on the daily. So actually, Pan on Fire is right. Maybe it's a short, but my philosophy is, okay, I don't buy overbought, but let it come down to that moving average. It won't be overbought any longer. If it pulls back down to around 48, close to just under 49, then to me it becomes a buy. Okay, so Pan says, I'm surprised it made it through 50. Trouble in Nigeria? Or is it going to 60? Yeah, well, there's definitely a lot of momentum here. And if you didn't hear the Nigeria news, they attacked an oil production facility in Nigeria, and I assume that'll be offline for some time, right? So that definitely helped, but it might have gone through even without that. Helped in the sense that it pushed oil higher. But it could have made it even without that. And, if you take a look, we had some oil statistics come out yesterday, too. Take a quick peek at the Earl. Hang on, where'd you go, oil? Inventory. Monday, Tuesday. Tuesday we had the API. API showed a drawdown, 3.5 million. So less oil means each little drop is worth a little bit. And then on Wednesday we have we also saw a drawdown here on the EIA number. Again, drawdown of over 3 million barrels, and that was greater than expected. The expectation was a drawdown of 2.75 million. Instead, you had a larger than expected drawdown. So, those type of drawdowns, those are not huge drawdowns, and generally they're not enough to keep propelling oil, but it's at a point where I think you have shorts covering. And that's one of the reasons why I'm very reluctant to short it, because I think you're right at the point where shorts are covering, where they're saying, okay, I didn't think it was going to go over 50. I've been short since 35. I have to cover. I think there's a lot of discussions like that going on right now. And, I think there's a lot of, like I said, a lot of discussions like that going on right now, I would imagine. Looks like a rising wedge, says Fred. It's funny, and Fred's not wrong. By the way, you say, yeah, uptrend, but it's not exactly a channel, right? The shape is more like a wedge. See that? It's not perfectly drawn, but I think you get the idea. I'm going to say, though, and that's actually supposedly bearish, but, I don't talk about wedges very much. And I do have a technical analysis where I discuss wedges, and I explain why I don't think that they're particularly effective. I always get in trouble every time I say I don't think this works that well or that works that well, but it's okay. I don't care about getting in trouble. I don't care if people, it's just my opinion. My opinion is wedges aren't very effective. Also, things like hanging man, candlestick pattern, I just don't think it's very effective. Anyway, that book's coming out next month, I believe. So I'll tell you more about that as it draws near. Here we've got, so yeah, it's definitely overbought. So a pullback to the moving average means it'll no longer be overbought. It pulls back to support, which is the moving average. That's where oil becomes a buy in my book. And therefore, dollar CAD, if oil pulls back, dollar CAD should rise a little bit. if dollar CAD, look at that, the love this thing got on the 20, it just caught a lot of resistance on the 20 on the way down. And that fire in Fort Mac really destroyed that trend. And you can see that fire, you're not hearing much about the fire now. They're pretty much resettling. And now that trend looks like it wants to resume on dollar CAD daily. But yeah, it needs to come up a little bit. It needs to come up a little bit. I'm not using that moving average right now on dollar CAD. The Dixie, $DXY on the daily had been weaker. It's just strong today. Here's the point I'm trying to make. I'm not predicting that the dollar is going to keep getting stronger. I'm just telling you that it's strong today. But overall, you look at this channel, dollar's been weak all year. Lower highs, lower lows, right? And so just the fact that we're green today doesn't really mean that much in terms of the overall trend. In my humble opinion, I could be wrong. Okay, good questions from everybody here. So I would not go short gold and silver or oil. Just commodities in general are just strong. When they're strong, just the buyers just have the upper hand. The shorts are covering. It's a rough time to go against that trend. This is one of the reasons why trends are strong too. Like you got to think about shorts that are covering. If anyone who's short, if you're short and something is going up, you're a future buyer, right? And if you're long and something's going down, you're a future seller. So short covering is definitely a part of it. So great comments and great questions from everyone on oil, gold, and silver. Just a commodity discussion today, basically, so far. And which brings us to a commodity currency, New Zealand dollar. Look at that chart. Well, don't you just look at that and say, wow, I really thought it was going to hit some resistance here around 70, and it just smashed it. It just smashed right through. And the fact is, you know, commodities are pretty strong right now in general. You look at something like DBC, that's a commodity currency, right? It's just a different type of commodity in New Zealand, right? This is commodities in general. The Deutsche Bank Commodity Index, DBC. Would you look at this chart? This is commodities in general. I mean, yeah, not only is it trending up, and it's been trending up all year, but now it's beginning to gap, right? And so, I don't know, is this the last gasp? This one's definitely overbought. You want to talk about overbought? This one's got to be overbought. But the thing is, it's been overbought for a while, and it keeps going higher. So overbought itself on a daily chart, to me, is not a sell signal. On the daily chart, it's not a sell signal. Here's my philosophy, okay? This is in an uptrend. I don't think there's any way to deny this, right? So when you're in an uptrend, the daily RSI is always going to tell you to fight that trend. And that's almost never a good idea. So I really look at the intraday RSIs. Take a look at more examples of this, like dollar CAD, right? Dollar CAD was in a downtrend. It said oversold here, but if you bought it here, you just got run over. If you bought it here, it actually worked out, but only because of a fire, right? Just a massive fire, right? Look back here when this was running up. It becomes overbought here and stays overbought all the way from 132 to 146. It stays overbought for 1,200 pips. What is that telling you about RSI overbought on the daily? Don't fight the daily RSI. Don't fight the daily RSI. What we do is we identify a trend and we say, I'm not going to fight this trend. Instead, I will look for RSI dips on the intraday. So back to DBC. This is currently in an uptrend. The RSI on the daily means nothing to me right now. But I know that if it's in an uptrend, I can only buy it, I can't sell it. That's a trend trader's motto, right? If it's in an uptrend, I can only buy it, I can't short it. So now I go to, say, the 60-minute chart. So I'm using the daily to determine the direction of my trade. The direction of my trade is I have to go long based on this chart. I have to go with the trend. Then I go intraday to find the dip. I'm looking for something like this. In April, right, it's going to dip on the RSI enough that I can buy it. And look, that's buying the low. Look, what a buy that would be on this index. Right? That catches the low. So I'm buying it, but remember, it's oversold, but it's not oversold on the daily, it's oversold on the 60-minute. But now I'm long, and therefore I am now in harmony with the long-term, the daily uptrend. So that buy actually occurs somewhere in here. So you buy that dip on the short-term chart so that you can get in tune with the longer-term trend. Does that make sense? That's why we're looking for the RSI, not on the daily, but we're looking at it for it on intraday. But yeah, this is overbought. This could pull back. But again, if it pulls back, I'd be looking for a pullback so I could buy it, not so that I could sell it. Okay. All right. Good questions, everyone. Great session so far. And what about this? Like, where would I buy? So this is a good tool to look at. I've never traded DBC. It's an ETF, so I could easily trade it. You buy and sell it just like a stock. but I haven't actually used it. But I would say you could use it as a guide just to tell you what is happening to commodities in general. Right? This is a commodity index, and it's the direction is very clear. So it must mean, corn and wheat and oil and gold, all these things seem to be on the move. Okay, and it's funny, but they do run in a pack. Commodities tend to run in a pack, and when things were going bad, right? When things were going bad, they were going really bad. Look at this. Plunge, right? And now 2016 has come. Commodities are going up. A few points about commodities that some people think commodity trading is complicated, and maybe certain aspects of it are different, right? But I'm going to make one point about commodities that make it simpler than stocks or Forex. Right? Stocks report earnings every 3 months. A stock has a CEO. Who's the CEO of gold? And when does gold report earnings? It doesn't. Gold is a rock. It lays in the ground until someone digs it up. Who creates monetary policy for gold? Nobody. Right? There's no board of directors of gold. It doesn't have a dividend. It's a rock. Okay? Oil. Who is the CEO of oil? When does oil report earnings? Oil does not have a board of directors or a CEO. Oil is a liquid in the ground, and then you dig it out of the ground, and then you put it in a barrel. That's it. There's no central bank of oil. You see, there's no interest rate associated with oil. You see where I'm coming from here? Commodity traders actually have it easier in certain ways. They don't have to worry about the Reserve Bank of crude oil, right? Or the Bank of gold. There's no Janet Yellen for wheat, right? Doesn't that make sense in a weird way? Right, that commodities are actually simpler in certain ways. And Fred, when I said I was not that keen on wedges, just remember, it's just my opinion, and my opinion is not necessarily better than your opinion. But it's just never been my favorite pattern. I just never had much success with it. So anyway, looking back on this, right, like you can see that oil, gold, silver, in some ways are much simpler than currencies and stocks. They just don't have the different things that come with it, like central banks and earnings reports and dividends and CEOs and board of directors. It just doesn't exist. Okay? All right. What's on the docket? Today's Thursday. We talked about the crude oil inventories. We didn't really talk that much about New Zealand, but I wanted to point out, New Zealand kept interest rates on hold. But if you're wondering why the New Zealand dollar shot the way it did, you can see it there on the daily. And but we can get rid of this line now. But take a look on the 5-minute, right? This is definitely a reaction to the statement that the Reserve Bank of New Zealand put out. Clearly, they did not change interest rates, but they came out a little bit less dovish than was expected. A little bit less dovish than expected. Really not pushing for a rate cut down the line. And it's possible they might cut rates in August. That could happen. But based on the statement, no one's really, they seem to be actually moving away from a rate cut. They're distancing themselves slowly from that outlook. just in case you were wondering. That's what set it off last night. So we had really ugly machine orders out of Japan overnight, down 11%. You can see that it's not considered a big market mover, but a lot of people pay attention to that machinery orders, as far as how does that how does that affect their economy going forward? It's considered significant economically, even if it doesn't move the currency all that much. Some numbers out of Japan too. CPI up 2%. That's less than expected. CPI month over month down 0.5. That's again that's more than expected. Down more than expected, right? Looking at Germany, exports flat. That was actually way better than expected. But the euro's down anyway. Draghi apparently gave us a speech. I didn't see anything from that yet. I'll tell you what, we'll go back and scope that out for you before the next session. And we're going to get jobless claims in 1 minute. Initial jobless claims, that's a weekly number. We're going to get some Canadian figures also in 1 minute as well. Pan says, why does everyone dislike Hillary Clinton? The other guy is too old to be Democratic president. I think they're the same age, Pan. I think they're the same age. I think, I would say this. I read a poll yesterday, and this is not political, and I really don't care. I think it's less important who wins than most people do. I think it doesn't matter as much, but there's jobless claims pretty close to expectations. But I will tell you this: they had a poll, and Americans were asked the one word they associate most with the two presidential candidates, the two remaining candidates. Trump, the word he was most associated with was arrogant, and Clinton, dishonest. So there you go, right? There are plenty of things that both candidates have what we call high negatives, meaning that they are really engender a lot of negativity, and they're both of them are the type of people, they're the type of candidates that people will come out just to vote against them because they hate them so much. You will, well, here's the thing too you have to understand is, I don't know what the press is like in the UK, but in the United States, the press is very, very, very pro-Hillary Clinton and very, very, very anti-Donald Trump. So anything Trump says, they're going to spin it to make him look like the worst person on earth. And anything Clinton does, they're going to spin it to make her look like the best person on earth. But the problem is we're all catching on to that now. And I think the same thing happens in the UK, if I'm not mistaken, to some degree or another. But the difference is that the public is finally catching on that the news is not the news. The news is an opinion, and the news is attempting to shape your opinion. And I think that's why there's also some resistance here, because the feeling that, just like Remain is being pushed down people's throats in the UK through Project Fear, I think a lot of people in the U.S. feel that certain candidates are being pushed down people's throats here in the U.S. Okay. All right, then. That's going to wrap for now, but we'll be back in 28 minutes, so be sure to tune back in. Plenty more to discuss. My gosh, we have hardly even looked at any currency charts yet. Well, we'll take care of that when we come back in 27 minutes. I'll see you then.